So how long will this relief rally last? That is what we are going to discuss today. As you can see, there are a couple of coins that are still green on the day, but it does look like we have met some resistance. And I have two vitally important charts that I have to show you for today, which you have to be focused on because they could shift the momentum within the market. So without further ado, let's get straight into it. And I think one of the most important or pressing stories of the day, which just came out, is from Autism Capital. And don't quote me on this yet. We need to dig deeper and verify what is going on with this. But essentially he's saying we're hearing semi-credible rumors that Genesis may be having solvency issues. They are having a call with their creditors tomorrow at 8 a.m. EST to explain the situation. If true, they may possibly be dissolving their ETH and GBTC. That's from the Grayscale Trust, so their Ethereum and their GBTC, to pay back their lenders. We will know more tomorrow. And look, if you look at Dylan Leclerc, it shows the whole house burning down over there. And that is pretty scary. That would mean that essentially they would have to dump that into the market. And if you aren't aware, Grayscale is one of the biggest holders of both. See, Autism Capital, yes. Welcome to crypto Twitter. This is a strange place. But essentially, it means that they'd be dropping one of the biggest holders of ETH and BTC into the market to remain solvent. So keep a close eye on that story. It should unfold as time goes on. The next thing I wanted to focus on is this from Keiko, and they say that the Alameda gap in crypto liquidity could be felt for a long time. Over the past week, BTC market depth has plummeted across exchanges, and you can see the same with ETH, the same with Sol over there. And essentially, what I want to mention about this is when you have low liquidity within the markets, and I was meant to actually mention this on a previous show, but I've seemed to have forgotten, so I'll bring it back up now. If you go and trade a very illiquid altcoin, what you'll find is with as little as $500, you could literally move the price as much as about 10, 15% if there's low trading volume over there. So it works in the same principle. What that means is that when the market has low liquidity like it does right now, and there's a lack of institutional interest, which is pretty much also the case at the moment, and I'll show you a tweet that will support that in a second, then all it takes is one player to come in the market and market sell, or on the other side, market buy, and consequently, they can push price very high to the up or the downside. So we need liquidity to come back into the market. And again, I'll stick by with what I've said. The best plan that you can stick with right now is dollar cost averaging, because until you see a real capitulation, of which I don't believe we've seen yet, there is no point in entering yet with your main bag holding position. So I wanted to go on to this tweet over here, and this is by Vetle Lande, and he says that institutional traders are back, but not in the 2020 way. And this is all around that whole liquidity issue. And he says, all data suggests that CME traders are shorting Bitcoin heavily. Discount to spot is at all-time high. 1 year high trading volume. So the volume is there. Massive growth in open interest. Futures term structure is in backwardation. And again, I've mentioned many times before, these are all the criteria that I look for to find a major bottom, but you don't want to jump in too early. You need to wait for the price action to follow through for all of this to play out. Essentially, what he's saying, if you go to the end, I'll share this as well, so you can go read through if you want the whole tweet. He says the takeaway: institutional traders have returned to Bitcoin, number 2, but they are extremely bearish and they're taking advantage of the low liquidity at the moment. Go read that on my Twitter. The link is in the description below. Very interesting thread. And going on to what Dylan shows over here, he says that BTC is flat on the day while Silvergate stock is getting hammered, more than 14.12%. Things that make you go, And if you don't know, Silvergate has ties with FTX. And I want to play this very quick video for you guys. Have a listen to this. Absolutely unreal. So let me just make this bigger. He says, or at least Tara Bull says, the FTX plot thickens. Everyone needs to see this. Hashtag Silvergate. And if you were in crypto early, you would know that one of the only on-ramps to get your crypto onto exchanges was if you were paying with wire transfers or EFTs, was you had to pay to the Silvergate bank accounts. And have a listen to this.
Attention on Friday that I want to warn people about, and it's a stock, and it's called Silvergate, and it's symbol SI, and they're the financial so-called bank that allows all these transfers and things to happen. And they have about $14 billion with a B in deposits, and they're largely from these offshore entities. And get a load of this. They transfer last year $1 trillion between these offshore entities and customers. $1 trillion off a 14 billion deposit base. And this name was brought to my attention by who I think is the best bank analyst on the planet, and that's Porter Collins of the Big Short fame. And he thinks they're in the process right now of having a run on the bank. And they put out some bogus press release on Friday saying that FTX was only $1 billion of their deposits, and they didn't have any loans to them. And the stock went up after ours Friday. But as Porter said to me, it's a deposit story. It's not a loan story. If they lose all their depositors, there's going to be a run on the bank.
Yeah, and so it's not just FTX either. So, I mean, that's the whole point. It's
not FTX. They do business with the worst of the worst. And the crazy thing is, these guys are so stupid at SI, right? The CEO's son-in-law was the head of risk, so they figured out something was wrong. And before FTX went bankrupt, this is what they promoted. It says, this is from their website. It says, life as a crypto firm can be divided up into before Silvergate and after Silvergate. It's hard to overstate how much it revolutionized banking for blockchain companies. And that was endorsed by Sam Bankman-Fried, founder and CEO of Alameda Research and FTX. It's crazy. And they put this thing out saying it's only $1 billion of deposits. Well, if there's a run on the bank and the US government wakes up or the Treasury wakes up and they start kicking the tires of this bank, they're going to realize they have no KYC on right now, which is know your customer, or they have no AML on right now, which is anti-money laundering, because FTX is a criminal operation, cut and dried. And if they were doing all this business for FTX, look at what happened to all the banks that did business with Madoff and things like that. So this is serious ass shit. And the fact that they put out a press release on Friday to try to hype their garbagey ass stock, you know, real guys reached out to me and said, can you believe this? And I said, it's absolute dog shit. So I am short SI. I think SI is garbage, and they need to be called out just like FTX needs to be called out.
So there you have it. The contagion is likely to continue to spread, and the repercussions are probably not done yet. There is going to be a ripple effect that goes through with all of this. And it's like Mr. Wonderful said yesterday, and I put this tweet up. I said that the most valuable takeaway from the show yesterday with Kevin O'Leary was that more forced liquidations are likely to come over the next 10 days. Plus, they'll be taking no new positions for the next 31 days so that losses become a tax write-off. And I said that lines up with what I'm seeing, a little bit more downside. So you don't need to front run any of these things yet. Wait for price action to show you what it wants to do. And currently, as it stands, we've made a new swing low and the trend continues to remain to the downside. So going into the actual price action charts, I would not be surprised to see this chart over here, which is the 2-week logarithmic regression curve chart, for this capitulation to finish playing out within the next couple of days. Of course, I can't say anything with certainty. It's all just a game of probability and statistics when it comes to trading. There are no guarantees, but from a probabilistic standpoint, it looks like this chart wants to come straight into this gray box over here, which, as you know, is that $10,000 to $12,000 region. So let's keep a close eye on that. 6 months and counting outside of the lower bands over there. Bitcoin on the Heikin-Ashi chart, which gives you the averages, that Japanese candlestick technique. It's showing red still, which means that you don't want to be in the market. Remember, this works out the average of the candles prior to that. So still telling you that risk remains to the downside. Using the weekly chart with 2018 compared to now, covered this yesterday, descending triangle like in 2018. This measured move still needs to play out, and I think it would happen sooner rather than later if it is going to play out at all. If it doesn't play out soon, and this can hold green for the next couple of weeks, then probably it's not going to play out to the downside, and maybe the bottom really is in. So that's what I'm looking at on the higher time frames. 4-day chart still telling you risk remains to the downside. Remain in a fully short position over there with price stuck below all the different moving averages. And then very, very important, probably the most important thing that I can mention right now is the tweet that I made yesterday. I said the dollar index is less than 1% away from its 200-day moving average. In brackets, that is support, while the S&P 500 is also less than 1% away from its 200-day moving average. In brackets, of course, that will be resistance, and choose your sides wisely. So let's take a quick look at that. And here it is. I can't believe how unbelievably close our lines that we drew many weeks back have played out with this DXY chart over here. We said a little bit up, watch for a fade over there, came through. You'd want to see it break down, lose this level, and then possibly if it's going to even tag that level, I don't know, or if it's going to bounce from here. But ultimately now what you want to do is you want to be watching on this bounce what happens to the stocks over here. So as this comes up, when this starts to form its next lower high, that would be the ultimate entry point for crypto. And we have covered that before, so you guys are well aware of that. The S&P 500, as you can see here, its 200-day moving average is coming up above over here. And anytime within the next couple of days, I do expect that it's either going to tag that or turn before that. So keep a close eye out. We closer now than what we were before to the end of this relief rally, in my personal opinion. So what else? VIX. VIX is very, very important. Have a look at that. Nice big green wick came into its 200-day moving average, seemed to reject off of that. But I do expect a bigger reaction off of this zone at some point soon. It's been trending down for literally over a month now already. And when that upside comes, of course, price is going to go down on the stock market. 3-day chart on Bitcoin, you can see MACD is just starting to cross to the downside, and it will look the same on Ethereum as well as many of the other altcoin charts over there. So I do think that we are due for a little bit further downside. And when you look at the key levels, the area that stands out as the first area of interest to me is the key yearly level, which is coming in at 13,880. Keep an eye on that level. That level, I've always thought when you look on a high time frame 3-month chart, if you were treating that as any other time frame and not thinking of it as a 3-month chart, you would say that is going to be the next zone that's going to get hit, is a key quarterly as well as a key yearly level. So areas of interest on the daily chart, if the upside continues, I don't think we've got much more. Anywhere between about 17,300 to about 18,100, so giving you about a $800 range. That is the zone where I still expect a rejection to come from. It may even come sooner, which is why longing at the moment for me personally is a bit risky. I prefer to wait for weakness into the resistance areas and then flip short. I'm talking more to the low time frame traders. So if you're trading leverage still, I still am. I'm still in the competition for the BITGET trading competition. Haven't taken any trades over there since the last time that we spoke, at least when we spoke about the competition. And my next trade will be a short, but I need to get proper evidence that it is breaking down and have a momentum trade because those are the ones that you lose the least money on. Okay, 4-hour chart over here, you can see all the different momentum oscillators are reaching, and they are going to be looking to cross over to the downside relatively soon, with still same story as yesterday. 55 and 200 EMAs on the 4-hour are going to be resistance, and most likely price will reject off one or the other. Stronger rejection would of course come from the 200, because it also does match up with a strong horizontal level. So more confluence within that zone, keeping an eye out. That means that your upside is limited on Bitcoin to about 8% at the most. But with that being said, it also could turn down at any point. Therefore, not really worth playing the long side, in my personal opinion. Now, lastly, I wanted to focus on the BBWP, which shows the width percentile between the different Bollinger Bands on relative or different time frames, and it suggests how much those are still going to expand, suggesting how much volatility is going to come into the market. Now, If you look at the weekly is been quite low and it is starting to tick on up, which means a high time frame, you can expect volatility to continue to the downside should the weekly remain within a downtrend, which it currently is. 5-day is already telling you the same thing. That one's got a little bit further. Let's go on to the 3-day to see where the 3-day is. 3-day is well on its way up, which is why we have seen the down move. So this is telling you there's still a lot of legs on the 3-day. It ties in with what the MACD is showing you. Expect further downside. Let's look at the daily. Daily got near the top, but it hasn't got as extreme as what it can yet. If you look back previously, you can expect these red vertical lines to start to print. That would suggest that you're reaching near the end of the move. And as you can see, there is still more legs on this move. It hasn't quite reached its end yet. Now, I wanted to go on to the lower time frames to show you what's going on over here. So volatility is still contracting, and that makes sense because we are kind of consolidating around the mid-range on the 1-hour chart. And what you would expect is that eventually this is going to have a big break either to the up or the downside. Now, a very simple tool that you can just use is a very easy diagonal trend line, just kind of marking these levels. Not a perfect fit, but give or take, that's more or less where you want it. The horizontals you have to have more accurately, and I've given this to you before. We have range low, mid-range, and range high. And kind of what I'm looking for now is you can treat this as a little bit of, on a low time frame, an ascending triangle, which could have a breakout to the upside. And once that breakout, if it does happen, that would be the area that I'm looking to go short from. Or alternatively, if you see this trend line start to break down and you make a lower low, so if you want to look over there, you need to break down this area over here. If price falls below 16,600, that would be your signal that it's time to go short. So you see it break down the trend line. Now you have your warning signal. Get prepared. Watch to see if this next level gets taken out. This level gets taken out. Immediately, I start entering some of my position. If it has a little bit of a bounce back up, I re-add into this zone on the lower high and then targeting back down to the range low or lower. That's the low time frame trade opportunities that I'm looking at. That's all that I really see right now. Not much else to add. Price is pretty much in the same place as it was yesterday. And I think that brings us to the end. One more thing, the NFTs, you can mint them over here. All you're paying for is the gas fee, which is only a couple of cents at the moment on the Ethereum chain. I think that the Brazil NFTs are fully minted. It looks full to me. I don't know if that's got any more left. But you still have Argentina, Germany. So pick your favorite teams, whoever you think is going to be the most likely winner. I see that was everyone else's thinking because Costa Rica is full. Saudi Arabia is full. Ghana's from Africa. They're probably the best team in Africa. Not too bad. But check that out. Soccer World Cup is coming up. Whether these will be worth anything in the future or not, I'm not 100% sure. But since you're not really paying anything for it, it may be worth a shot. If you do want access to that, use the link below here, the OKX link. Sign up to OKX if you haven't already. If you have, all you need to do is go through onto the NFT page. So you switch from exchange to wallet, which is written on the top over there. And then you can buy your NFT. Click on NFTs over there or mint your NFT for free. You don't have to buy it. It's free. I have the Germany one because Germany is one of my favorite teams for the Soccer World Cup. That's it from me, guys. Give the video a like as well. I would really appreciate it. Hit the bell notification and subscribe if you are not already subscribed. And okay, a question. Any suggestions how to determine the bottom from altcoins when the shit hits the fan? Basically, my answer to that would be that pretty much whatever Bitcoin is doing, I would basically be buying my favorite altcoins irrespective of whatever their price is when Bitcoin capitulates properly. So that's the reason why I mostly do the market analysis is on Bitcoin, because of course we have thousands of different altcoins. For me to sit and independently pinpoint each different altcoin is very difficult to do. And I think that that also the bottom won't be in until altcoins make new lows. certain altcoins, some of them, like the lower caps, may not even make new lows. Some of them, when you look at them from a chart perspective, are just kind of consolidating. It looks like a flat line, right? Like what do you call that thing when somebody's in hospital and you look at their heart rate and it just flat lines? That's literally what a lot of the altcoins look like. So let's say they're sitting at one, for example. I don't want to give the coin's name, otherwise everyone's going to go and buy it, and I don't want to be called a shiller. So this coin is at $4 and it's been stuck at $4 for a long time. So that may be a bottom for that coin. But other coins like Ethereum, I believe, still have lower prices to reach. They need to make new lows. And Ethereum is about $745 is what I'm looking at. Remember, guys, I have told you before, like I'm not a perma bear. I'm just a risk manager trying to adequately manage my risk. And I don't want prices to go to zero. I told you I would just be entering in two different. There's only two ways that I enter the market. Number one, on a capitulation. I haven't seen the capitulation that I want yet. It's very close, but it hasn't happened. So I enter on a capitulation, or I enter in a new uptrend. That's it. I don't buy downtrends. It doesn't make sense unless it's a capitulation, because capitulations lead to a market reset, and pretty much you never see you never say never. You most likely won't see below the wick low of a capitulation candle again. Price may come down and retest some of that as an inefficiency candle, which I've shown you guys before what that looks like. But if you buy capitulation and you know it's a capitulation, then pretty much that should be the bottom, and those prices should not be seen again. So I hope that helps. Oh yes, one more thing. Our Discord manager said, join the Discord. The link is also in the description below. Let me just show you, because they are activating a couple of new tools on there. So here you go, Discord group over there. If you join the Discord, they're going to have different like chat rooms and stuff where you can connect with other traders with video chats and voice chats and things, and you can discuss your different trading plans. So they're adding a couple of new features and constantly working on making it better. And then, of course, I do have the Kyledoops trade group, as well as the thoughts and analysis. And I drop trades in there anytime I actually take a trade. I do drop it in the group, and I always share my thoughts in there. So jump in the Discord as well. I will see you all on tomorrow's video. Have an absolutely stellar day. I appreciate you all. Thank you so much for watching. Give the video a like, hit the bell notification, and subscribe. See you tomorrow.